Okay, concept check 4.1, distinguish between a progressive and regressive tax. So the tax burden on a progressive tax increases as your income increases. The opposite is the case on a regressive tax. Tax burden of regressive tax decreases as your income increases. Another example of a regressive tax, I mentioned not Social Security, the sales tax. Social Security is effectively regressive as well, because if you make over, it's 168,000 and something, you stop paying it. So which, if you make $500,000 a year, the percentage of your income is much less than somebody who makes $100,000 a year that you pay in Social Security. So, all right. So next, what's a marginal tax bracket? How does it impact taxpayers making tax advantage contributions to their retirement plans? The marginal tax bracket is the rate at which your last or next dollar of ordinary income will be taxed. So and how it affects the taxpayers making tax advantage contributions is, so if you're in your marginal tax bracket is 22%, you make $100 tax deductible contribution to a qualified retirement plan. Your retirement plan receives $100. You deduct the $100 from your taxable income, and this deduction saves you $22 in federal income taxes. 100 times 0.22 or 22%. So next is explain why some taxpayers have marginal tax rate as high as 40%. So single person in Philadelphia with $200,000 of taxable income they're in the 32% tax bracket. They're going to pay 1.45% for Medicare, so that's part of FICA. What is it, 6.65? I believe it's 5.65. Social Security goes away. So no, it's 6.65 because it's that. Anyway, so they pay 3.07% of sales tax, and then their city of Philadelphia has a 3.9% wage tax for an effective marginal tax rate of 40.31%. So it's a pretty staggering amount of income. They also, the Tax Cuts and Jobs Act put in a $10,000 maximum for state and local taxes, so making it even harder to go over your standard deduction too. All right. We'll start the next lecture with the steps calculating your income tax.